Okay, now I hope that you are able to see the agenda slide, right? So I'll just quickly run through. We will have an introduction to GST. We will understand GST. We will touch upon certain highlights on the GST. Then we will discuss on the registration process. Then the key compliance requirement that is critical for us to understand, for us to be compliant under GST regime. We will also touch on the existing law and compare with, okay, what major changes that have happened and what are the existing law that have been slightly modified, basically, I mean, like covering the loopholes or the drawbacks that are been there in the current law, how those things are taken care in the GST. The important thing is that what will change, I mean, what should be the preparedness of us for the GST. And lastly, we will talk about the consequences of non-compliance. So before we get into the GST, we must have heard about this major big hurdle that was first, the GST needs to cross, which is basically the Amendment 122. We have heard about it. So let's just try and understand what is this Amendment 122 and why it is important. If you see our country is a federal system of taxation. Now, what do we understand by federal system? So, as we know that there are certain taxes which are charged by the central government. What are the taxes that are levied by the central government? The custom duty, excise duty, service tax. These are the levies that has been levied by the central government, and central government has the power to levy taxes on basically manufacturing of goods and provision of service under the current law. States have power to levy taxes broadly on sale of goods. Then you have entry tax, then you have octroi. Now, since our legislation has the power very clearly distinguished or demarcated between the center and state, so under the current regime, the center cannot charge tax on sale of goods, and vice versa, the state government cannot charge tax on manufacturing of goods or provision of service. So this was the first amendment that is required under the legislation, which now gives powers for the state and the central government to charge or levy tax on goods and services. So that's how you have this goods and services tax. So with the passing of this Amendment 122, now the central and the state government have the power to jointly levy tax on goods and services. Okay. So what does this mean, right? So again, we must have heard that this is a major revolution that is going to happen, and it's a biggest tax reform that is going to happen. Definitely, it is going to be a significant indirect taxation revolution in our country since independence, right? So we will also discover that why it is such a big revolution and as we move forward. The second one, again, we must have heard about this tagline that one tax, one nation, one market, right? So one tax is, again, if you see, for goods and services, right? So there is going to be one tax levied. Now these are something, one, we have to keep in our mind that the draft model law was made available on the public domain, and this whole session that we are going to cover based on the law that stipulates how the GST law needs to be implemented is one. Number two is there are further, on a daily basis there are some updates that are happening. We will also keep you updated on that. So the idea of GST is there's going to be one tax limit, which means basically throughout the nation the rate of tax is going to be a single taxation, and it is applicable across the nation. Currently, if you see, under excise we have a different rate, and especially if you take VAT, different states have different rates for the same product, right? So this is the significant or the major revolution that is going to happen under GST, which is basically going to be, in simple term, it's going to be just one tax, one nation, and one market. So it means today for me the entire country is going to be the market, and I can now conduct my business and be compliant in a very simpler way. And it is not just the tax reform, the GST we are talking about. It is going to be an outright business reform. So we will also, as we move forward, we will understand what are the implications. So in our agenda, we also said what should be our preparedness, what is going to change. So we will discover that why are we now stating that it is not just a tax reform. It is not that the rate of tax is going to change. It is not that the forms are going to change. There is going to be a major business reform that is going to be happening, and the businesses need to be prepared for this major change. And GST is just not an incremental tax. It is a transformational tax reform that we would be seeing in our country once it is implemented on 1st of April 2017. One very important thing that we have to know about the GST is destination-based consumption tax. So what do we understand from a layman's perspective? First, let us take the current state. If you see the excise, right? So in excise, the duty of excise is levied on manufacturing of goods, which means the duty is levied at the source. Now, in case of VAT, if you take, VAT is levied on sale of goods. So whenever I now start supply of my goods, or when I invoice my goods, when I initiate my sale, the VAT is applicable. So which is basically, if you see currently, these are at source. Now this whole thing is now changing under GST. It says now it is going to be destination based tax and it is consumption tax. We will understand what is the consumption tax that we are talking about. And GST is going to be highly compliance driven law. So when we say highly compliance driven law, it is basically at the grassroots level of your business information related to the compliance. Now when I say grassroots level, it is literally, it is going to be every purchase and your every sales is going to be tracked, monitored, reconciled and accepted. So what are the key milestones of GST? So one, we spoke about Amendment 122, right? So on 14th of June is what the draft model law was made available on the public domain, and the intent is that people will go through the model law, and then various tax practitioners, tax experts, the businesses will understand the model law and then see what are going to be their implementation challenges, or what are the difficulties that they would face based on the model law that has been prescribed by the government. And the expectation is that people will now go back to the government saying that, okay, what are the difficulties, what recommendations that they want to do, such that they can make the model law easier, better, and it is implementable easily and businesses can run, rather than being concentrating more on compliance rather than not concentrating on the business aspect of it. The first step was that on 3rd of August, the Rajya Sabha passed the bill. Right? So next, on 8th of August, the Lok Sabha passed the bill. Then on 8th September, President has given the assent, which means basically now GST can be implemented anytime. So the time that we are saying that it is going to take time for us to be prepared, and a lot of infrastructure, since we are saying it is going to be completely compliance driven, and also, so since we are saying it is compliance driven, it is also going to be technology driven compliance system in our country. So the infrastructure needs to be built. So that is where the government's expectation is that we should be ready by 1st of April 2017. So once this is done, on 12th September, the cabinet approval to form the GST Council. What is this GST Council? See, one major thing that is going to happen now, which has never happened, that's why we say that it is a major revolution that is happening in our tax reform. There was central government, the central governments were administering the central taxation. There is state government, the state government were administering the state taxations, right? So these were two different machineries we were working in isolation. Now, both these state and central have to come together and they have to work together towards the GST implementation, or towards the GST taxation system that is going to be implemented in our country. Right. So the GST Council is basically to get a consensus, like if anything needs to be changed. So today what is happening, like, state government, some state government thinks that, okay, I need to now change the form, right? So now they notify and then the form is changed. Some other state government says, okay, today I'm going to increase 1%, or I'm going to introduce surcharge, I'm going to introduce various taxes. They just do it. I mean, like, based on the approval that they get from their state level approvals. But today, since it is going to be central and state and it's going to be one single tax that's going to be charged, so we need to have this consensus of all this 36 states and union territories in our country, right? So the GST Council is basically, it's basically the union finance minister will be chairing the GST Council, and all the other state finance ministers will be member of this council. So what is that council going to do is basically any decision that needs to be taken, like for example, if they have to increase the rate. So today the GST Council is going to finalize the standard rate. So as of now, we still have no clear-cut rate that has been prescribed as the standard rate under GST. There are talks between 18 to 20, 22% is what should be the standard rate. So the GST Council is the one which is going to basically discuss, and then any decision that is going to be taken to do or not to do, 2/3 majority of the council members need to vote for it or against it. Only then any decision is going to be implemented, or it is going to become the law. So on 16th, the government has notified the GST Council, which means basically it says the GST Council has been formed. And 22nd and 23rd was the first GST Council meeting that took place, and one major decision was taken during the GST Council is that the threshold limit, when we come to the registration part, we will discuss about it. From the earlier threshold limit which was prescribed, okay, there is a change that has happened, there is an enhancement that has happened in the threshold limit. Okay, so this is how now the GST Council is going to meet, and then the complete rollout of the GST law will undergo, and then the finalization is going to happen. Yesterday, so the draft rules were made available on the public domain, which is basically regarding to registration, the payment, and the tax invoice formats and other thing. So another important thing that I just want to discuss, because today we are understanding this law from a layman's perspective, right? So in any case, I'm definitely not going to use any jargon or any words that are, I mean, like, I'm not even going to relate to any section or anything. I mean, like, we will be discussing about understanding GST from a layman's perspective. So first is the model law, which we are saying is basically the act. So what is this act? Act says what to do, right? Now, what is this rule? A rule is going to now say how to do. Right? This is the difference. So today, what to do is in the draft mode, which people can give their opinion, saying that this is good to do or not good to do, or we can do it better. The rule is now going to talk about how to do it. So today, if you see, the rules and the formats are available, which means, what are the registration, like if a new dealer needs to register under GST, okay, what are the rules, what are the conditions, I mean, how is he going to now comply towards registration norms? Okay, the forms have been prescribed. Okay, what are the types of form? If you want to be a regular dealer, what is the form number that you need to use? All this we know about it. We have seen this in VAT, excise, and service tax. So similarly, they are talking about the payment, and they are talking about the tax invoice. Now, as we speak today, further some more draft rules have been published on the public domain related to the return format. So which means basically what are the different types of return that are there, and the formats also have been published as of today. And so we will now start getting, every day we will start getting, I mean, like, iteratively we will start getting this information, such that now we get more clarity on how to do part of it. Okay. So now let's come to the main subject. So why GST? It's a simple tax structure. So we can visualize or we can imagine now from various different excise, service tax and VAT and multiple rate you need to remember and all those things. Like if you are a manufacturer and who is falling under the current prescribed threshold limit, which is 1.5 crore for excise, so you will have to register under excise. Then you will have to register under service tax if you are providing service, if your threshold limit is exceeding 10 lakh rupees under service tax, and VAT. Obviously, since you're a manufacturer, you will also have to take your VAT registration. The VAT registration threshold also depends on different state, the threshold limit. So you have these three different registrations, and for each of the statute, you have different rate prescribed, right? So all this will get eliminated, and under GST, you will have one simple tax structure. It will say if you are supplying goods or if you are selling goods, right? So one important thing that we will have to know is that we will have to unlearn a lot of things and which we know from the current tax structure, and then we need to relearn certain new things. So I will also tell you what are the key things that we need to remember and we need to know when we talk about GST. So first is, it is a simplified tax structure, very simple. Whether you are supplying goods or whether you are supplying services, there is going to be one rate specified or prescribed. So that is the rate that is going to be applicable. Okay. Number two, it eliminates cascading effect. Now all of you must be wondering, when VAT was introduced in 2005, like the whole the whole country made this claim saying that by introduction of VAT, the cascading effect is going to be eliminated, right? So yes, the cascading effect under the VAT statute, the cascading effect got eliminated. So let's not get into the detailing of that. We understand the change, right? So we were discussing about the elimination of cascading effect, right? So under VAT, yes, since the input tax credit was made available under VAT, so it eliminated the cascading effect. But further, we are talking now GST is going to eliminate cascading effect. Just for us to to understand from a layman's perspective, if you see the manufacturer, once he manufactures the goods, then excise is levied. Now, if a dealer, let's say I am a wholesaler or I am a retailer buying from the manufacturer. Now, when I buy from the manufacturer, the excise duty that is being charged by the manufacturer is definitely going to be passed on to the next person where he is going to make this sale invoice. Now, this excise duty, since I am not covered under excise, I don't have the eligibility of claiming input tax credit of this excise. So what happens here? Now this excise duty that has been charged, since I am not able to claim input tax credit of the excise, naturally this becomes cost to me. Number one. So now when I am selling, let's say that I am adding some margin. We have an example in a couple of slides. We will get more clarity on how this elimination of cascading effect is going to work. But I still just want to give you an introduction to it. Now when I'm selling, I'm going to add margin to it, and this excise duty becomes my cost, right? That is one. So which means now this tax is now becoming part of my cost, and the cost is going to go up. Number one. Number two is that today, if you see, first is the assessable value, then you have this excise duty that is charged, and now when you charge VAT, the VAT is charged on the base value plus the excise duty, which is tax on tax. That also is going to be eliminated. So basically, one is elimination of cascading effect, the other one is elimination of tax on tax. That's the major change that is going to happen in GST. And what is the impact this is going to have, we will see. The next is going to be a technology driven system. When we move further, and then we will see on the compliance part, we will understand how and why the technology is going to play a major role in successful implementation, monitoring, execution and administration of the GST. What GST is going to do? There is going to be an increased revenue. From a government's perspective, increased revenue through more people being compliant, because it is going to be a compliance driven taxation regime, right? And technology is going to be the key, which is going to now ensure there is transparency and the compliance is completely monitored and tracked. Okay. There's going to be increased revenue for the government, and definitely by eliminating this cascading effect and tax on tax, there is going to be some kind of a benefit for the end consumer. We will take these 4 points and then we will see that in detail in the upcoming slides. Okay, what are the highlights of GST? First is the common threshold limit across the country. Like I had mentioned earlier, each statute had different threshold limit. So if you take VAT, each state had a threshold limit ranging from 5 lakh to 25 lakhs. So if you let's take the case of Karnataka. In Karnataka, if I have to definitely or compulsorily I need to register once my turnover exceeds 15 lakhs. In Delhi, if it exceeds 25 lakhs, then I have to register. So this was the different threshold limit. But under GST, it is going to be common threshold limit. Now, the moment we talk about GST, one thing we'll have to keep in mind that when we say GST, the full form, we know that it is goods and services tax, right? So the threshold limit is going to be applicable for goods and services. Somebody could be only supplying goods, somebody could be only supplying services, or both. Okay, so the threshold limit will take into consideration the total aggregate turnover. That's one big major change that is happening, and which is a very, very good change that is happening for businesses are concerned, right? So next is basically, if you see the continuity of tax credit across the supply chain till it reaches the consumer. Under GST, now what is going to happen? The earlier example that I took was that, a manufacturer charging excise duty, the dealer, since he is not covered under excise, he cannot claim input tax credit. But under GST, irrespective of you're a manufacturer or a trader or a supplier of services, it really doesn't matter. At every point, from the inception of the goods or services or from the starting point till it reaches the consumer, whatever tax GST that has been charged in the supply chain, each of the entity will be eligible to get credit across the supply chain. Elimination of tax cascading effect in the supply chain, which the example that I took was VAT is charged on the base value plus on the excise duty. So now it will eliminate, the GST will be charged on the base value. The registration part, now it's going to be PAN-based registrations. So what is this PAN-based registration? See, as an individual, we have a PAN. And currently, if you see excise and excise and service tax or PAN-based registration, but the VAT was not PAN-based registration. So we know that okay, in Karnataka, if 15 lakh is going to be the exemption limit, right? So I might have some 3-4 companies. Right, so because I don't want to cross this 15 lakhs, I don't want to get into all this tax net, right? So this is what some of them were doing, and then this was fine. But going forward, if you see under GST, now if I am a proprietor and I have one PAN, right? So now I have, let's say, the exemption limit is, the threshold limit is 20 lakh rupees. So I have 4 businesses, right? And 3 businesses does 5 lakh each per annum, and the 4th business does 6 lakhs, so which is 21 lakhs. Now under the current regime, I can have 4 different registration under VAT, and then I still need not have to get covered under the VAT, right? But going forward under GST, with taking the same scenario, I have this 4 companies where each company is not crossing the threshold limit, but irrespective of the company that I am running, it is going to be aggregated to my PAN. So my PAN is a single PAN. All these 4 companies, when I take the aggregate turnover for the year, it is now coming to 21 lakhs. So which means now I have to register all these 4 businesses under GST. So that's what basically we say about the PAN-based registration. Very important word. The first thing that we need to remember is there is under GST, there is no more manufacture or sale or provision of services. Okay, it is going to be supply. Supply is going to be the most important criteria that is going to determine the point of taxation. So it is now supply of goods or supply of services. We will definitely cover the nitty-gritties of this supply in the next session, because I don't want to scare you people on too much on the GST. First, let us understand the simplicity of GST, digest it, and then we will cover the other nitty-gritties on each of this subject. Like we are planning to cover the area wise, like for example supply, the taxation part, and various other things we will cover in the upcoming webinars, or we will share the documents. Another important thing is the valuation method. So under excise, we have broadly three levels of valuation. One is based on the assessable value, which is what we call it as ad valorem. Then we have this ad quantum, which is the valuation is done based on the quantity, not on the selling price. The third kind of valuation is to be on MRP with abatement that has been provided, right? So now no more confusion. Okay, so under GST, whether you are supplying goods or whether you are supplying services, broadly, okay, there are going to be exceptions. Even here there are exceptions. We will not currently touch upon that. But 90 to 95% of the cases, the valuation method is going to be, again, from a layman's perspective, it is very simple. What is transaction value? Transaction value is quantity into rate, the value. That is going to be the assessable value. Okay, that's how the valuation method is broadly considered for point of taxation under GST. Okay, another major change that is happening is that currently, if you see under VAT, when there is a branch transfer that is going to happen from HO to branch or from branch to branch within the state or across the state, basically, there are some declaration forms. We provide this declaration form, and based on the declaration form, these transactions do not attract any taxation. But under GST, now we need to recall this word supply. Under GST, what did we say? Supply of goods or service, there is going to be a tax element in that particular transaction. Now, branch transfer is basically I am supplying my goods from one branch to another branch or from my head office to my branch. Since I am supplying, now tax needs to be charged. Okay, so under GST, all branch transfers will be liable to GST tax. But what is the best part of it? Since we had discussed about in the earlier slide, we discussed about the tax credit across the supply chain. This, whatever is the tax that is being charged on branch transfer, will be available as credit eligibility, which means the receiving branch or the receiving head HO now can claim the input tax credit on the tax that is being charged on branch transfer. Okay, the other important thing. See, now this is another area where the cascading effect is going to get eliminated. So currently, if you see, for all interstate trade, especially on purchases, CST is charged. Purchase or sale, CST is charged. So now, when I am buying material, let's say I am in Karnataka and I am buying material from a supplier from Maharashtra, right? So now CST is going to be applicable. So what is the CST that is going to be applicable? CST as per the prescribed rate in Maharashtra, whatever is the scheduled rate that is being prescribed for that particular item, that rate is going to be applicable. Now, if I provide C form to my supplier, then it is going to be charged at 2%. So let's assume that I have now issued a C form to him, and then now he is going to charge me 2% CST. Now I get this material into my place of business in Bangalore, Karnataka, and now this 2% that the tax that I have paid, I am not currently eligible towards input tax credit, because since it is an interstate transaction. Again, this adds to the cost of my goods. Under GST, right, for all interstate supply of goods, inward supply of goods, the input tax credit is going to be available for the trader to use as credit. Okay, this is another major change, that is major highlight of the GST compliance. One big people, most of you, I don't think, you are into these kind of hassles, but then most of the businesses, if you see, they procuring one form from the department is going to be such a big pain, right? So under GST, no forms, no declaration forms are there. All these declaration forms are abolished. So no more declaration forms that is required under GST for your movement of goods inward or outward. Okay, now we will come to the threshold limit. Okay, so basically what is a threshold limit? A threshold limit is something where basically if a dealer's total turnover exceeds the specified amount by each of the statute, then that person needs to register under the statute and comply to the statute's law requirement and the compliance requirement. Okay, so under GST, what are the thresholds? Okay, if you see, we will first take the regular dealer. Okay. So if you take the northeastern state, two different categories of states have been broadly categorized into two different categories. So one, basically the northeastern state including Assam, where the GST specifies, the rule specifies that if a dealer whose aggregate turnover exceeds 4 lakh rupees in the year, then that particular dealer needs to register for GST. He has to register. Now, if his aggregate turnover exceeds 5 lakh rupees, then now he has to pay tax on the sale, which means basically the taxability is effected from 5 lakh rupees of aggregate turnover. Rest of India, the aggregate turnover, if a business aggregate turnover exceeds 9 lakh rupees, then the business needs to register, and if it exceeds 10 lakh rupees, then the payment of tax incidence starts. Now, like I mentioned earlier, the first GST Council met on 22nd and 23rd, and one of the major decisions that was taken was a lot of recommendation from various industries and various bodies that the threshold limit of 5 lakhs for northeastern state and threshold limit of 10 lakhs for the other rest of India seems to be a very low thing, and then small businesses are going to be impacted. So the recommendation was that the threshold limit needs to be enhanced. Okay, so the decision taken by the GST Council is that yes, now, so this is not again come into the draft law, because this draft law that we are now discussing about has been already published in June, right? So there will be another draft law, or there will be another or final draft law which will now incorporate these changes and these decisions, and we will get another maybe draft laws 2 or the final law which will be implemented. So what is the change that has happened? So now the government, the council has decided that for northeastern state, if the aggregate turnover exceeds 10 lakh rupees, right, then they are covered, they have to register under GST. For rest of India, if it exceeds 20 lakhs, then they have to register under GST. Composition scheme, right? So again, to protect the interest of small dealers or the dealers who directly deal with consumers. See, there is one, we know there are two kinds of businesses, right? One is B2B, which is business to business, and the other one is business to consumer, right? So the composition levy is been there in the current taxation regime, and the same thing, the same facility or benefit is made available under GST also, that the small dealers can opt for a composition levy, or they can opt to be registered under composition scheme. So what is the criteria? The aggregate turnover should not exceed 10 lakh rupees. Now let's take, so one, we have now said that the change is going to be, instead of 5 lakh, it is going to be 10 lakh, instead of 10 lakh, it is going to be 20 lakhs. Let's take a dealer who is in rest of India, and that particular dealer's aggregate turnover is exceeding 20 lakhs. So now he has to now register. Now he's got an option, right? So the option is, if his total turnover, the aggregate turnover is definitely exceeding 20 lakhs, he has to register. But if it is not exceeding 50 lakhs, right, then the dealer has the option to register himself under composition scheme. Composition scheme is going to be a lighter compliance, where you don't have to get into too much of detailed submission of information. There will be some, you will definitely have a form. Even those forms, let's say under GST, if you see, it's going to be a monthly return filing for the regular dealer. But for the composition dealer, it will be a quarterly basis, and the kind of information that a regular dealer needs to provide is not required by the composition dealers under the scheme, and that is what is currently also available under the VAT and service tax. Transitioning of registration, all the existing dealers, right, will automatically migrated and they will get automatic registration. It's just going to be one registration. So the law specifies that they'll give about 6 months time where the department is going to ask. So now yesterday the rule and the format for registration is already published. So the rule is now going to tell you what are all the steps you need to take. There is this format of registration form is made available. So the dealer needs to fill up and the additional details will be required. For example, since now VAT is going to be part of GST and the registration is going to be PAN based. Currently, the VAT department doesn't have the PAN as the part of the till, right? So these are some of the information that is required such that the central and the state government can now get the complete information of the dealer. So within 6 months, once this information is provided, then you will get a regular registration. So currently, the existing businesses need not have to worry. On April 1st, if GST is implemented, they can just move into the GST regime and then as per the law, they can start doing their business. So which is the first and the provisional, then the dealers will get the final registration. So now we were talking about the existing taxes which the central government is levying, the taxes that the state government is levying. So we need to now understand, so how are these taxes are going to get subsumed under GST? Like we said, under GST, I had also mentioned that the center is also going to levy and state is also going to levy. So what are the taxes? How the existing taxes are going to get subsumed under each of this, and what is the component of this GST? I'm sure you must have heard this terminology is called CGST, SGST, IGST, right? So we will try and understand what is this and how the current existing taxations are going to get subsumed under GST. So first let us take all this central taxation. So excise duty is central tax, additional duty of excise is central, service tax is central, then we have various surcharges and cesses. So these are central levied taxes, and now these taxes are going to now get subsumed under Central Goods and Services Tax, which is CGST. Okay. Now let's come back to the state levies that has been levied under the current regime. One is the major taxation one is the VAT, then we have this purchase tax, then we have entry tax, not for all the goods, some of the goods, then we have this luxury tax, then we have octroi, surcharge, cess. These state taxes will now get subsumed under SGST, which stands for State Goods and Services Tax. So what is left now? The CST part, right? So that is not covered. So where is that now going to get subsumed, and what is going to happen to the CST and the other taxes? So first is you have the CST, then you have this CVD, countervailing duty, and SAD is secondary additional duty or something. I'm not sure about the SAD, the full thing. So the CVD and the SAD part will now get subsumed under IGST. So what is IGST? I stands for integrated. It is not interstate. Integrated Goods and Services Tax, right? So now we have seen these three components, right? So one is that we have seen this CGST, which is central GST. Then we have seen this SGST, which is state GST, and we have this IGST. All these three components is what is going to form GST. So when CGST or when SGST is going to be applicable and when IGST is going to be applicable, whenever there is going to be a transaction of supply of goods or services, then within the state, okay, then CGST and SGST is going to be applicable, which is your GST rate. Whenever there is a supply of goods or services that is being effected outside the state, which is basically the interstate, then the IGST is going to be applicable. Okay, again, if you see, IGST is also going to form, literally it is going to be CGST plus SGST. Okay, so that's your IGST. So let's take this one tax scenario under GST, which is now going to, we had this one diagram that we had, which talked about simplification of tax, elimination of cascading effect. Okay, so those two things that with this example, we will cover it and then see how the taxation scenario is going to look under GST. Okay. Let's take the example of a car. Now this example that we have taken is under the existing, as of today, under the existing tax regime. So the example that we have taken is, let's say the cost of manufacturing a car is 4 lakh rupees for the manufacturer, right? So now he is going to invoice this to the car dealer. So the excise is at 12% and then there is infrastructure cess of 1% that is going to be applicable, right? So if you add this, then the excise duty is going to be 52,000. Okay. Now VAT is computed on what? VAT is going to be computed on 4 lakh plus 52,000. On 4 lakh 52,000, VAT is charged at 12.5%. So which is 56,500. So what is going to be the total dealer invoice value or the amount that is going to pay the manufacturer? It is going to be 5,08,500. Right. Now dealer has to add some margin to that, and now he has to finally sell it to the customer or the final consumer. Right. Now under this current scenario, if you see what is going to be the dealer cost, the dealer cost is going to be the base cost, which is 4 lakh rupees plus 52,000 rupees of this excise duty and infrastructure cess that is paid, since now he cannot claim input tax credit, so it gets added to the cost. So now the cost of the car to the dealer is going to be 4,52,000. Let's say that he takes a 10% margin, so which is 45,200, and now the sale price for the dealer is going to be 4,97,200. On that he is going to charge VAT. Now in the case where he purchased, he paid 56,500 rupees as VAT. Okay, so he is not adding that to the cost because he is eligible to claim as input tax credit, right? So now he is going to charge 62,500 as VAT. So which means if he has to now discharge his VAT liability, 62,150 minus 56,500 is going to be his VAT liability, right? So now the price to the consumer is going to be 5,59,350, right? Now taking the same example, taking the same values, we will see how can we envisage. Now this is just, we are giving you an indication, because since the rates have not been finalized, okay, and the rules also, more or less we need to get more clarity on these things, but then maybe slight changes could be there because of the change in the rate, but it's just an indicative scenario that we have built up under the GST. Taking the same thing, the cost of the car is going to be 4 lakh rupees, and now under GST the manufacturer is going to charge. So here the standard rate that we have taken here as an example is 11 plus 11 is 22%. So whenever we say GST is 18% or 20% or 22%, it is going to have, currently it is going to be equal. The CGST and SGST part, I mean, like, we need to get more clarity on that in case if there is any changes. We don't see any major change in the component of the GST and SGST, right? So for us, just for simple understanding, if the CGST, if the GST rate is 22%, then CGST will be 11%, SGST will be 11%. So on 4 lakh rupees, CGST at 11%, 44,000 is charged, and you will now notice here SGST is charged on the base price. It is not base price plus CGST. It is not SGST 11%. So both CGST and SGST is 44. Now tax on tax is eliminated. Now let's come back to the dealer invoice value. The dealer invoice value under GST is going to be 4,88,000 rupees. So what is going to be the cost to the dealer? It is going to be 4 lakhs. Right? In the earlier case, it was 4 lakh plus the excise duty of 52,000. But under GST, the car dealer now, he is now eligible to claim input tax credit on GST, which has got the CGST of 11% component, SGST of 11% component. He can claim that as ITC. So that is the reason why this 44,000 is not getting added as cost. So now the cost to the dealer still remains the base cost of 4 lakh rupees. Now he had some margin of 10%, which is 40,000 rupees. Now the sale price to the dealer becomes 4,40,000, and he is going to charge 22% GST, which comprises of 11% CGST and 11% SGST. So which is 48,400, 48,400. So finally the price to the customer, you will see it is 5,36,800. So if we just take just this saving to the customer, again I'm saying indicative. So if you people are planning to buy the car, really, I mean, like, you can definitely wait till GST comes. It's going to be beneficial. But then this is just an indicative example or illustration that you have given. If you see the difference here is almost 4% is what the final consumer is going to save because of the elimination of cascading effect of the excise duty and also tax on tax, which is the VAT which is charged on the excise duty and the assessable value of the cost. Okay, so this explains the elimination of cascading and tax on tax. Okay, now the input credit mechanism. So let me just give an anecdote, okay, for us to understand this better. So input credit mechanism. Now, if I ask all of you, do you want to be a hunter or a fisher? I'm sure most of you will say that you want to be a hunter. Why? Because that's where the thrill is, right? Right? You chase the target and then I mean you feel great about it, right? This is exactly what the government was doing for the last 70 years, right? So they were chasing the businesses to be properly compliant, to pay proper taxes on time, to claim proper input tax credit, eligible input tax credit on time, to file the return on time, all those things. I mean, this was not working, right? So now, what does a fisher do? Right? So now fisher, he relaxes in the chair, takes the fishing pole, right, puts the bait, the hook, and throws it into the water. Now what happens? The target now moves towards the fisher, right? So this is exactly what GST is if you understand from a government's perspective, right? How can I relate this anecdote to the input credit mechanism? If you see, under input credit mechanism, under GST, it says very clearly that until and unless your seller, okay, who is the supplier of outward supply. No, so again, we should not be using this word called sale and purchase. It will be outward supply or inward supply. Just for us to understand better, I'll still use the existing word, right? So the outward supply is basically sale. Until and unless you are out, the dealer who is making an outward supply or sales, if he is not declaring that in his return as a sale, right? And you are not eligible to claim input tax credit because he is not declaring that as sale, number one. Number two, if this dealer, though he is declared it his sale and you are also declaring it as purchase, so now the sale and purchase is matched, no problem. But still you can okay, since both of them have furnished the purchase and sale detail which is matching, the buying dealer, okay, so the inward supply dealer is now eligible for input tax credit. So under VAT or send VAT, the same, this is what happens, right? So now what GST says is, yes, you are eligible for input tax credit, but then this is only a provisional basis. So when will you get the proper credit of input tax credit? The government specifies that the selling dealer needs to now furnish the sale information, which you will now reconcile, and then your record also will show the same purchase detail. The other criteria is, this is the current law that says, and this is where a lot of people have given very strong feedback to the government saying that this is going to be really difficult to manage and administer, especially for small businesses. And this is one of the area where technology is going to be a major key player to make GST implementation successful. So what the department says now, that the selling dealer has to now file the return on time and he should now clear his liability. Once he files the return on time and clears the liability, then you are eligible for proper input tax credit on the purchase that you have made, right? This is exactly what I was talking about, the fishing. Now the whole buying dealer, selling dealer, agent dealer, every dealer has to have a proper understanding and then they have to come here. If they are not aligned, if you don't get this visibility, if you don't get this clarity, if you are not reconciling, if you are not prepared to get this information and then reconcile, okay, then it is going to be very difficult. So this is what happens is the government says, you people now decide and then give me all the information. Only when all this, whatever criteria I have mentioned, if this is matching, then you take input tax credit. That's exactly what fishing is, right? So let's just see how this input credit mechanism works. Probably there could be some relaxation to this in the upcoming model law in the changes. We don't know, but then yes, there are serious recommendations on this front from various quarters to the government. So how does it work as per the current draft law? Let's just have a look at it. So there is a buyer, then there is a supplier, right? So buyer is nothing but the inward supply, a dealer who's got an inward supply, and this is a seller who's doing an outward supply. Right? So one is that yes, I need to have a tax invoice to claim input tax credit, and then I have to receive the goods, right? So these are the two major conditions. If these two things are there, then I can now claim provisional ITC on that particular tax in the invoice. This is the provisional, which now goes to the electronic credit ledger. Now, again, coming back to the technology driven, one more component that we were talking about, the technology driven, right? So here what is, like I had mentioned earlier, that every invoice is uploaded, matched, cross-verified, reconciled, okay? Only then this eligibility of input tax credit is going to happen. So now for this, the government, the GSTN, right? So the GST network is going to hold the backbone, which is the technology backbone, the servers and all those things. Now each one of us, like how we have our own portal under excise, service tax and VAT, under GST we will have a portal. Now there the government is going to have two ledger. One is called as electronic credit ledger, which is going to now tell you that what is your actual eligible input tax credit based on the criteria of the being met by the supplier. Number one. Number two is they are going to have another register called electronic cash register. So that is basically all the payments that you are making or all the refunds that you are going to get will go into electronic cash register. So now you have one return, then you have this two ledger that the portal is going to have. It is, if we can just relate this one under people who are covered under excise, you will know that we used to under excise we used to have this PLA register, right? So where you can make the payment and then once the duty is discharged, if the balance is available, it acts like your passbook, right? So similarly, now under GST you will have this electronic credit ledger and you will have this electronic cash ledger, which is maintained by the department based on the return information that you have furnished. At the same time, now you should also make sure that your books of account or your records is now going to match such that you are able to always reconcile and have the right information available with you. That way like both the information in your books of account, whether it is manual or whether you are using a software, and the value that has been reflecting under the thing. So this is one aspect. The second aspect of it, the provisional ITC and the actual ITC is basically like your TDS deduction, right? The AS 26, right? So where basically if you see a person who's deducted TDS, now if that person is not remitted the TDS, he will have the consequences of non-compliance. But unfortunately, since that and once he remits the TDS, that gets credited in your ledger, your TDS ledger. So when you are now filing your return, basically what happens is whatever is the TDS credit that you are having, only to that extent you can claim and reduce from your tax liability. The similar kind of thing is what this, you will have this, we can just relate it to just get a visualization of what is this electronic credit ledger or the cash ledger, right? So now you get this provisional ITC on this particular invoice, and now the outward supplier, right, needs to file the return on time, okay, and he has to pay the tax liability. We will see what are the timeline and what are the different returns that are made available under the GST. So if these two things have been met, then you will get, in the sense the buyer will get the ITC credit. So in this case, let us take a use case. Now there is one invoice, he is uploaded and you have only one purchase invoice. You have received the tax invoice, you have received the goods, he is uploaded the purchase sales invoice. You are also uploading your purchase invoice, both have been reconciled. So you are eligible for input tax credit. On the specified date, 20th is the last date for your monthly return. On the specified day, let us say that he files the return and he pays the tax liability. When I say pays the tax liability, his input minus output, whatever is the net of the tax liability, he pays within the prescribed time. Then you are now completely eligible for this input tax credit. This is how the input tax credit mechanism works under GST. Then your eligibility of ITC is done. What are the types of return? If you take the regular dealer, there are broadly 4 returns. There are a couple of more returns could come, like there is discussion about GSTR1, which is basically for the resolution of the discrepancies or disputes. Okay, so those are some of the returns. We will cover that once we get more clarity on that. So currently, if you see broadly, for us to understand, the GSTR1 is basically a monthly return, which is the you can call this as annexure, right? So which is basically the return will have the dealer needs to capture all the outward supply of goods and services that has been made during the previous year, and he has to now upload this to GSTN by the 10th of succeeding month, right? So now GSTR2 is once the selling dealer, let us just visualize a scenario. The selling dealer is going to upload by 10th the all his sales detail. Now let's say I have made 4 purchases from this particular person. Now from 11th, right? From 11th, the moment I go to my portal, in my GSTR2 return, the sales related to my purchases by that dealer who's filed GSTR1 will now automatically reflect in my GSTR2, which is auto-populated, right? So I have made 4 purchases. He's uploaded 10 sales, but then 4 belongs to me. Now when I go to the portal on 11th, the 4 his sale invoice will reflect in my GSTR2. What is GSTR2? That is the detail of all my inward supply, which is nothing but the purchases, which I need to now accept it. If there is any discrepancy or for whatever reason that you have 5th invoice, which that particular dealer is not uploaded as sale, but you have this as purchase, you have a tax invoice, you have received goods, you can now update that information, and by 15th, you will have to now submit your GSTR2, right? So now from 16th to 20th, if there is any discrepancy between the buying dealer and the selling dealer, the GSTN will now basically quickly, the moment this information is populated to the GSTN, the notification will go to the outward supply and the inward supply saying that, okay, there is a mismatch. This person is showing it as purchase, but you are not shown it as sale. So these are the reconciliation that needs to be done. The dispute needs to be resolved and all those things. There are timeline also. If it cannot be done in the current period, you can resolve it by the next period. Okay, so these provisions are there. The details we will discuss in another separate session when we cover the return part as a main topic that we are going to discuss. Then, so now what happens is GSTR1 is related to my sale, GSTR2 is related to my purchase. Now GSTR3 on 20th it is going to be ready. It has my purchase and sale. It shows what is my outward liability. It shows what is my input tax credit liability. It will net it out, and then the GSTR3 is auto-populated or auto-prepared by the GSTN, which is by the government, right? So by 20th, based on the return, we have to now accept it, and then whatever is the tax liability, now the dealer needs to pay. So this is how the returns and the process of filing return is specified under the GST law. GSTR8 is basically the annual return, where the time is that by 31st of the next financial year, the regular dealer needs to file the GSTR8. Now coming to the compounding dealer, we discussed about the composition levy or the compounding dealer. The dealer has to, he did not have to file the return on a monthly basis. There is a form called GSTR4, which is basically the quarterly return, which he has to submit by 18th of the succeeding month. Then, okay, now let us just see this upload process. I was talking about by 10th, I have to upload my outward supply, and on 15th, I have to upload my inward supply, and how the monthly return gets generated automatically and how the tax liability is paid. So we will just see what is this process of upload, right? So let's say these are the various dealers. So by 10th, by 10th of every month, these people have to now upload all their outward supply, which is the sales invoices, okay, to the GSTN. Okay, that's what we are calling it as GST portal to GSTN. Right. So now each of them, they will upload their sales invoices by 10th of every month. Now from 11th onwards, right? So the sales returns, I mean the sales details that has been furnished in GSTR1 will automatically get auto-populated in GSTR2. What is GSTR2? It is the purchase detail or the inward supply detail. It will get automatically auto-populated. So whatever the selling dealer is furnished, it will get auto-populated. Now you will see this 2 red line which is going up. So this is what I was mentioning earlier, that in case if you have any purchase invoice which has not been declared by the selling dealer, okay, there is a provision in the form where you can now say, okay, these are additional purchase invoice from these people that I have purchased, and you have to now upload this by 15th of every month. So once this outward supply and inward supply GSTR1, GSTR2 is completed, right? So there is 5 days of window period for in case of any discrepancy. Here we have seen there are 2 invoices that I have uploaded as purchase, but my selling dealer has not uploaded as his sale. So that needs to be sorted out, and if it is gets sorted out, good. So by 20th of every month, okay, so based on these information, the GSTR3, which is the monthly return, will automatically auto tax return will get generated automatically, which will say, okay, this is the total turnover and this is the total tax liability, and the challan also will be made available by the portal. All we need to do is just download the challan and go and make the payment. So this needs to happen by 20th of every month. So which means 20th of the month I have to accept this return, and also the dealer needs to make the payment, which means whatever is the liability that is there for that particular period or month, he has to now make this payment. Okay. So how does this return works is basically, one is that this is what we're talking about, the extreme right is what is the GST net or GSTN, right? So this is the main server, right? So then we also have GSPs as an intermediator or as a gateway. Now how can we relate this GSP to understand better is, like if you see today, the TDS return that is filing, this NIC acts as a gateway, right? So we upload it on the NIC, and then from the back end it goes into the GSTN. Similar kind of, and why this is done is basically since it's going to carry huge amount of data for all the dealers. The expectation is that there's going to be 6 to 8 million people who will be filing their first GST return on 10th of May once it is implemented on 1st of April 2017. So there's going to be a huge data. So it has to be more secured, robust, and all those things. So the gateway acts basically as an additional layer of security kind of a thing. So we will understand this. We will have some separate a session on what is the GSP, what are their role, and what value add, and all those things we will discuss about. Just to overall understand, saying that my GSTR 1, 2, 3 can either pass directly to GSTN for small businesses, or it passes through my GSPs. Okay, the next question comes is the input tax credit. So we were talking about CGST, SGST, and IGST, right? So supposing if I have CGST, SGST, IGST, in what order I can now set off my input tax credit to my tax liability, all right? So how does this work, right? So it's very important for us to understand, because we cannot miss this order, and this is what is specified, and we can only adjust in this order that has been specified. So let's take this example. Let us say that first I have CGST ITC, which is my input tax credit of CGST I have. So what is going to be the order of set off? Obviously I have to set off against my CGST liability, right? So I will set off against my CGST liability, and if there are additional ITC after setting off my liability, I can now set off the CGST liability to IGST, right? This is the order that you need to set off your input tax credit. Now SGST, yes, first set off against the SGST. Any excess SGST that is available, you can set it off against IGST, right? So next, what is the third thing is the IGST. right? So that's my IGST, which is, this is the three major components under GST, right? So under IGST, if you see, again, it's very simple and logical that all my IGST, ITC, first I need to set it off against my IGST liability, right? Now, the remaining ITC of IGST liability, first I will set it off against the CGST liability, right? So I will set it off against CGST liability, and further if there is any IGST ITC that is available for that particular month, now I can go and set it off against the SGST, right? So this is the order, and if you notice, right, the IGST is talking about, first is primarily setting off against the IGST, then it says next do your CGST set off and SGST set off. If you notice the above two things, so CGST, okay, and SGST are two separate stream, which means what should we understand, that you cannot cross set off your excess ITC of CGST to SGST. Very important for us to remember, right? Similarly, you cannot set off any excess SGST ITC to CGST. So these two are separate things. So in case, so the question now is, okay, I have set it off my CGST, I have set it off my IGST, still I have excess CGST. What should I do? Very simple, carry over to the next month. And same is applicable for SGST. Under IGST, you do this thing, and even after adjusting all this thing, if there is excess IGST, carry over to the next month. Okay. Now coming to the payment part. Right, so 20th of the subsequent month, the payments have to be made, and for all the tax amount which is exceeding 10,000 rupees needs to be mandatorily made through e-payment, right, which is basically the online where you can do NEFT, GST, IMPS and those kind of things, and less than that, offline you can pay by cash, check or DD, where the challan is made available. You need to just download the channel, print the channel, and then go and pay it at the bank. Okay, what are the inferences of the existing law? One, we have seen this. I hope that, basically, this last one hour, 15 minutes that we have covered under GST gives us an overall basic understanding of how the system of GST is going to work, right? And we also have, to an extent, knowledge of the existing laws, right? So now we are only just trying to see that, okay, what are the existing law which is forming more or less part of my GST. Okay, this gives us this comfort saying that, okay, like GST is not a new devil. It is a better devil compared to my existing laws. Okay? So the composition scheme was there in the existing regime and will get continued when its composition scheme is made available under the GST law also, which we have seen and discussed about it. The next is the composition levy. Right? So currently the composition levy is somewhere between 1 to 2% under various this thing, and also the current draft law does not specify the rate of composition levy, but it says that it cannot be less than 1% of the total turnover of the composition dealer for the given month or the period, right? So it is generally, since it's a quarterly return, it is going to be the for every quarter, right? So that's the thing, but there is no specific rate that has been specified yet. Okay, so we have this reverse credit mechanism. Now this, if you see, this reverse credit mechanism is basically it is applicable in the provision of services, right? Well, there are certain services where the recipient of service, the tax liability lies on the recipient of service. For example, the goods carrier and various other services in the existing regime. Now this reverse credit mechanism or reverse charge mechanism will be applicable, will be there under GST, and now it will now get extended to goods also, which the law currently doesn't specify what are the kind of goods or what are the kind of services for which reverse charge mechanism is going to be applicable. They will be notifying it, and then based on that, then the reverse charge mechanism is going to be implemented, will be applicable under GST. Exemptions, yes, currently one is that yes, GST says that there is no exemptions, okay, and there are no declaration forms and all those things. But yes, there is a section under the current law which gives the provision for the government or the GST council to decide whether going forward, okay, should exemption be provided, or is it required to be allowed partially or fully, conditionally, unconditionally. All those things the GST can do, but then there is a section which allows uh, the GST, the government, to implement or introduce exception if it is required in the interest of the nation and various other things. Remission of tax, we will not discuss about it. This is basically applicable for goods which, basically, especially in case of petrol and other thing, where it gets evaporated, So this mainly applicable under excise, remission of tax. It is still getting continued under GST also. The valuation and various other things will change. So let's not get into too much of the nitty-gritty of this. Captive consumption, yes, under excise we have the captive consumption. The same thing will be applicable under GST. Reversal of ITC, broadly we have seen this reversal of ITC in case of VAT. Reversal of ITC is also applicable under GST. Input service distributor concept, which is currently existing under service tax, will be also available under GST, and we have seen under the return there is one return which talks about the return to be filed by the input service distributor. Job work, more or less with slight modifications and enhancements. All the existing, whatever is the existing law, job work, more or less the similar thing is made available under the GST. Tax credit on input stock held, yes. In 2005, when in 2005, 5 states introduced VAT in 2005, right? And subsequently various other states followed suit, and then by 2007, 2008, almost all states were, under the VAT regime, right? So at whichever point of time, right? So when VAT was introduced in that particular state, right? So the government gave them the benefit of input tax credit on the input that they are holding as closing stock on the last day prior to the date of implementation of the new law. So this was already available in the current law, especially under the VAT scheme you have this, right? And also it is available under your excise and service tax, where a new person who is not falling under the threshold limit and is not registered, and then he is crossing the threshold limit and he is registering, the input tax credit facility is made available under the current law. The same thing is extended, will be made available under the GST also. So with GST, what will change? Okay. Very important is the technology. So what is the great thing about technology? It is basically, if you see, now we will see the real digital B2G connect. So what is B? B stands for business and G stands for government, right? So by this time we would have had a clear, at least an idea of how this technology is going to play a major role, and we saw this uploading process, the return filing process and all those things, right? So there's going to be this, the real B2 business to government connect is going to happen, because the businesses are going to upload their sales invoice to the government portal, and the government is now going to tell me what is my purchase, right? That is going to auto-populated in my GSTR2, which I have to accept it. If there is any, if there are any discrepancies, then I need to just update that information, what I'm holding, and then I give. So which means basically now there is a two-way communication between business to government. The business goes to the government, government gives the information to the business, business uploads to the government, and this is a major change that is going to happen in the digital, the technology part of it. Right? And again, we would have got an idea of the end-to-end technology which is going to drive this system, right? So right from my purchases to the thing, and every aspect of it, wherever there is a discrepancy between the buyer and the seller, right? So the law says that, immediately both the parties will be notified. So which means now you can, the dealers can expect more notifications from the government in their inbox rather than their business information in their inbox, right? If there are any problem. And very important thing, if you see the GST compliance rating, right? So what is this GST compliance rating, and how this GST compliance rating will be successful is that the technology is going to be the key, right? So what is the GST compliance rating? If you see, if we apply for a loan, the bankers first thing today what they check is the CIBIL rating. The CIBIL rating basically tells us whether I am an eligible guy to take a loan or I'm a useless guy where nobody is going to touch me, right? So we are aware of this, right? So similar kind of a thing. So what is the problem that we saw in the input tax credit, which is where I said majority of the recommendations have gone and they said this is going to be a bit severe in the under the GST regime, right? Assuming that no changes is going to happen, right? The government is going to implement the way they have prescribed currently. It becomes very, very difficult because now I don't even know if I go to if I have an existing relationship with my supplier, then I can continue. I mean, the trust element is going to now play a very important role, right? Because now if I go to a new person, now okay, one is that there is two-way cash flow impact, negative impact to my business. One is that I am buying the material, he is going to charge GST and I am going to pay him the money including the GST that is charged, with good faith that he is going to now comply to the GST, right? Now, assuming that this person is not filing the return and then he is suddenly vanishing, right? So one is that my money towards the GST on my inward supply, I have paid. Now I am not eligible for this input tax credit. Now I have to pay additionally to the government, right? So now this becomes a very, very challenging thing. So now what the government, the law prescribes, now how this is going to happen, we will have to wait and see. But then this is a very good thing that is happening. So which means today, as a businessman, if I want to procure something where there is a supplier who is a stranger who supplies that material maybe at a competitive rate, now I can go to the GST and this compliance rating is going to be made publicly available on the GST and for the various dealers. So now I can go to the portal and see, maybe I can just type and see whether this guy is GST compliant, right? So whether he's filing his return on time. Probably, we don't know how they are going to give this complaint rating now, whether it's going to be star or all those things, we don't know. But this is a very good thing that is going to happen. And the success of this is what the technology is going to drive the success of implementation of GST. What are the processes that needs to be changed, right? So one is that now it is more of transaction focused, right? So which means now one is that first, yes, I have to now record. Now even genuinely by mistake, if I don't record a purchase or a sale, it is going to be difficult because the other party is going to do and then that reconciliation and it is going to definitely come out on the portal, right? So one is that yes, it is going to be transaction focused. One is that all my books of account, all my purchases and sales, I have to record it, right? And there's going to be a transparency from the grassroots level of all business record. So in a business, you see majority of the transaction or majority of the information for a business is going to be the purchase and sale. So this whole information is now transparently available at any point of time in GSTN. You will get all your purchase detail and your sales detail, right? So in case your system there is a problem or something, you can always go to GSTN and then download. I'm just giving you just a visualization. Okay, the other important thing is triangulation of supplier and recipient record. So now basically we have to now make sure that whatever information that is my purchase and sale should match with my other party. See, with this requires my additional care that needs to be taken under my GST regime. The process, if you see, one is the transaction focused. Right, so which is basically, if you see now, all my purchases and all my sales, what I'm recording and what I'm uploading needs to be recorded and uploaded properly because the other party is also going to upload that information and that will get triangulated or that will get cross-verified, right? So that is number one. Number two is the transparency from the grassroots level of the business record. So which means I was mentioning earlier that see, for every business, if you see the purchase and sale plays the most vital and important or major transactional records that is there, No, all majority of them are made available on the GSTN portal, right? So we upload that information, government has that information. So we need to have this transparency and then make sure that, these informations are, recorded appropriately as per the requirement. The next aspect of it, if you see, is now I need to now triangulate. So which means basically all my sales, I have to now upload, and my purchase, my dealer who was purchasing, now he is going to triangle. So which means now I have to make sure that, okay, is there any sale invoice that is missed out, which my people who have purchased from me I have uploaded as my sales invoice, right? So this is what basically my sales and purchase within my business and across my parties, I need to now triangulate my supplies and receipt of goods. Then the rectification of errors and the omissions have to be taken care within the prescribed time. Otherwise, within the prescribed time, if the discrepancies are not getting sorted out, then, if you have claimed input tax credit, you will have to repay that input tax credit along with interest. So that's what the law specifies. Then the other aspect is the reconciling of returns with your books of account, which is very important. So either way, your books of account should be accurate such that your return is going to be accurate. Or now the government, say the GSTR, with GSTR 1, GSTR 2, it is going to give the missing information. I have to now take those missing information and ensure that those informations is not being taken care for compliance, but also the same information needs to be updated in my books of account for future references. One very important thing that is going to happen here under GST is there is no revised return concept under GST. Earlier, yes, we could have made a mistake, some bills have been missed out, I can go and file a revised return. Now here there is no revised return. Once we get into the understanding the returns, which will cover as a separate subject, when we understand the components of the GSTR 1, GSTR 2, we will understand why we are saying that there is no provision for a revised return, because there is a dispute which has not been resolved in the previous period by 20th of the subsequent month. Then the department says that, okay, you resolve it within the next 60 days. So now if you see in the next month return, there are areas where it says that, okay, what are your disputes which was not resolved, and now you tell me what are those things. So now what is happening? In fact, if you see, actually it is a revised return only I am filing, but then I am revising that information in my subsequent month's return. I'm not revising my entire return from a previous period. So that's very, very important thing. That's why it requires a lot of discipline. Your process needs to be changed, and this is what we were talking about. It is not just the tax reform, it is going to be a major business reform that is going to happen. Because discipline is, yes, I have to now submit my return on time. So it means my GSTR 1 by 10th I have to submit, my GSTR 2 by 15th I have to submit, my GSTR 3 I have to submit by 20th, and various other, my annual return and other thing, right? So why it is very important? So one, we saw the input credit mechanism, that if the selling dealer, if you see under GST, this is my analysis, right? So if you see under GST, the seller is the king. If the seller is not uploading his sales invoice, even though I have his purchase invoice, I can upload it, but then if my seller is not accepting that, if there is a dispute, in any case within the prescribed time period, if this is not getting resolved, I am going to lose that input tax credit, right? Similarly, it talks about if you are going to raise a debit note or credit note, depending on those things, you cannot as a buyer raise a debit note or a credit note, okay? The seller has to raise a debit note or a credit note accordingly based on whatever is the business negotiation or the finalization or the resolution that you have done, and you will only accept the debit note or the credit note of the seller. So the buyer doesn't have anything that he can initiate to close this a particular disputed transaction, right? So these are some of the things which basically it requires, and that is the reason why online submission becomes very important, because if I don't file the return on time and if I don't discharge my liability for that particular month within the prescribed time, one is my purchaser is going to suffer the input tax credit. Okay. Apart from that, since I'm not filing the return on time and I'm not paying the liability, I will not be eligible for my input tax credit that I have claimed. Right? So it is very important that my on-time submission of return is going to be very critical. On-time payment also is going to play a very, very critical role. In case if there is any dispute, it is not resolved within the prescribed time period, one that yes, you have to reverse it or you will have to repay the credit that you have taken, and number two is that interest is going to be applicable on those time barred, disputed amounts. Generally, there is going to be a less scope for kacha bill, right? So, since we would have understood this by now that what is the, what is the mechanism, how the mechanism is being built, such that it becomes very difficult for us to play a fool around with. And what is one major change that is going to happen VAT only dealer? Like if you see, since the VAT exemption limit is ranging between 5 to 25 lakhs across the country, right? And excise being the threshold limit being 1.5 crore. Even if I'm a manufacturer, if my annual turnover is less than 1.5 crore, so I will not be registered under excise. But then my turnover will exceed the threshold limit of any given state, then I will be a VAT dealer. Right. So today under GST, if you see, majority of the VAT dealers, right, so will now get exposed to the compliance of inherited provisions of excise and service tax. Right. So now supply of goods, right, I have to now manufacture, right? So manufacturing is not going to stop until GST. Now there will be various registers and other things probably which could be prescribed, so which we don't have the detail, right? So now a person who's under VAT will also, and not covered under excise, will have a major compliance challenges where the competency needs to be there, understanding of the law is very important, guidance from the professionals probably he could seek and all those things. So this is one major exposure for the VAT dealer under the GST regime, especially who are manufacturing not covered under excise. Consequences of non-compliance, there is a late fee. I mean, it is 100 rupees per day for every day during which such failure continues, subject to a maximum of 5,000 rupees. Right? Interest, delayed tax payment, there is an interest and the rate of interest is not yet notified. So, but then, the interest is going to be there for delayed tax payment. Fines, 10,000 rupees or equivalent amount to the extent of tax amount evaded. And also, there are prosecution also where, basically if the tax evasion is ranging from somewhere ranging from 25 lakhs to 500 lakhs, then there is going to be one is there is going to be penalty and also imprisonment ranging from 1 year, 3 year to 5 years for the non-compliance part of it. Okay. Now this is just to give you an idea that if you take this GST system, now you will understand this. These are the various stakeholders who will be connected and who will be in constant communication with the data exchange could happen with these various stakeholders. What is the preparedness for GST? Books of account records should match 100% with the return, right? Then discipline in maintaining and recording and reconciling, especially the electronic credit and cash ledger, which is available on the GSTN, right? So recording of, we were talking about the input tax credit, right? So records, whatever is the record that has been maintained, it should be substantiated if required by the department for clarity of the input tax credit eligibility that you are claiming. It is very much required. Then the capital goods held on the last day of the appointment date of GST transition. These are the information that needs to be recorded properly, revised or revisited, and ensure that the records are proper such that there is not, there will not be any much delay in getting those credits. And the big transitioning to the GST itself. If you see here, technology plays, I mean, we were talking about the technology is the key. So if you just see what should be the technology system or a software which would help, I'm talking from an overall technology perspective, right? So any technology should help the GST dealers in seamlessly detecting, correcting, and compliance at various stages. One is that, yes, when I'm configuring in my system, can I have this kind of benefit or facility which seamlessly detects, corrects, and ensures that I am compliant as per the GST law, right? While recording my transaction, can the system assist me in detecting, correcting, and compliance aspect of it, right? So one is that, yes, reconciling at sources, yes, I have recorded my purchases and sales. So how quickly I can reconcile and make sure that whatever the GSTR wants, in whatever column they want, whatever information they want, are those information being captured properly in my books of account today, such that I'm able to quickly port it to my GSTR1. Then reconciling post reporting. So I have reported, okay, so genuinely I must have missed out one sales invoice, but my purchaser is now uploaded the purchase invoice, so which I should now account this as my sale invoice, which I have missed it out. So this is something which after I have reported to GSTN, the reconciliation process that is required, how a technology can seamlessly help me to quickly detect, correct, and ensure me that I am compliant as per the law. Then the triangulation with the GSTN is basically the electronic cash ledger, the electronic credit ledger. We'll have to make sure that, yes, I mean, like my values. This is like, the bank reconciliation that I'm doing, right? So currently I have my bank account in my books of account, and my banker has my account in his books of account, right? So we have this bank reconciliation in Tally. If you see, we have this auto bank reconciliation. What does this auto bank reconciliation says? That I just download the transaction, push it into Tally, and now or Tally automatically now verifies the transaction and says, okay, these are the missing transactions in your book which the bank has passed, and these are the missing transactions in the bank book which you have passed, right? So something like this is something the technology should help us such that it becomes easy. It should not be cumbersome. So it should not happen that the way things are going, it should not happen that whatever business I am doing, that becomes my side business and compliance becomes my main business. Right. So how can a technology system can help me and transition me from my existing regime to the new regime, such that I am not worried and I am able to conduct my business as usual. Yes, there is going to be a little bit of, not little bit, definitely a little bit of more effort that is required for every businessman to understand and then prepare the businesses to build the competencies, one as an owner or the organization competencies have to be there. At least at the basic level, I need to understand what is the GST system, what is the requirement, and how I need to be compliant in this requirement. So one very good thing, which again we said, is the technology plays a very important role in successful implementation of GST across the country, right? So the hero of GST, if you see, is the API. So what is this API? Is basically application program interface. And like this is what I mentioned in the previous 2 slides before this, where I said the technology part, we said this is the real digital B2G that is going to happen. So this API, for the first time, the government is coming out in providing the application program interface to the ASPs, which means application service providers, where like these links or this interface can help the software developers to develop the product in such a way that it can seamlessly now communicate with the GSTN and ensure that the compliances are met as per the requirement of the law. This is a very, very important thing. This is going to be a major game changer that is going to happen in the technology world as far as Indian compliance is concerned going forward. Tally's role, again, these are at a very, very nascent stage, right? So nothing has been firm progress or anything. So I'm just giving you an idea, like one we said is the GSTN, which is the government server, right? So now previous slides we saw about this GSP, like how the GSP plays as a gateway kind of a thing. Now if you see this GSP, GSP is interface with GSTN, right? And ASP is application service provider, which is, if you can relate ASP, then Tally is an ASP. We are also wanting to be GSP, right? Now, supposing, let us assume that everything goes fine and all those things happen, and then assume that we become GSP. Once we become GSP, now this, since Tally is a GSP and Tally is also an ASP, this GSP ASP combination is like the best couple in the world. Very, very understanding couple. You can do wonders by being a GSP and ASP, and the kind of experience that we can give in the business solution as a Tally product is going to be phenomenal, and we couldn't have even dreamt the kind of experience that we can give in our product, which we have not even, even dreamt of in our wildest dream. That's basically, we are talking about the change in the technology and the advancement that, the interface and the communication and the connectivity that is going to happen between the GSTN and the GSP and the ASP. So that's all I have. I hope the session was informative. You were able to get a broader understanding of the subject as GST, and like Mr. Manish had mentioned earlier, right? So we have our blog, blogs.tallysolutions.com, or on our TEPL website and our Tally Solutions website. We have this link to the blog. We have a long GST